Hi, folks. Dan Bird here with a daily scan for April the 10th, Thursday. One more day left to this week. This bouncing up and down week with the market, and it was down today, up yesterday. Where will it stop? And will JP Morgan send it lower or higher? JP Morgan reports earnings tomorrow, kicking off the earnings season. And I think the earnings season is going to be a little rocky. I think lots of companies are going to take the opportunity to, even if they do well with earnings and revenue, I think they'll take the opportunity to guide lower for the future. That way they can beat earnings when they come to it the next quarter or two down the road. That's the way CFOs work. So stay tuned for that. Keep an eye out for that. When we start seeing earnings tomorrow, we'll take a look at what earnings are coming up. But JP Morgan starts it off tomorrow, and they could be the key to sending it one more time, either up or down. So, as always, I am not a financial advisor. So, I do this for educational purposes only. You need to understand your own investing style and make your own trading decisions. So, let's take a look at what happened today. The market bias didn't really do much, kind of just going sideways. Not too many ups or downs, one way or the other. By the way, I am doing a Zoom meeting for subscribers to my website. So if you're interested in joining, this is really just open to everybody. I'll start off with going through any new things that I've added to the website and then just open it up to questions. We can talk about where the market's heading. We'll talk about anything you want, indicators, stock charts, technical analysis, individual stocks, whatever anyone wants to discuss. We're just open. It's kind of an open forum for everyone to talk. And all you have to do is come here to the homepage, breakpointtrading.net, and click on this box right here. It will take you to the webinars and newsletters page. And that's where the link for the Zoom meeting is right there. So you'll be able to join it right from there at any time. On the 12th, it will be at 1 p.m. on Saturday. That's Eastern time, 1 p.m. Eastern time. All right, let's take a look at what happened. Let's look at the S&P. See that bouncing pogo stick of a market. See right there, actually looks like a hammer. So that might be good news, even though it's sold off today. And I had somebody ask, how do you set stops in a day like this when the market goes up so much? Well, that's kind of difficult to do. I did mention yesterday that this looked like short covering to me, a short squeeze. And usually when short covering happens like that, especially with that pronounced movement, it usually pulls back the next day. And that's exactly what happened. It pulled back today. So one option is just take profits, of course, at the high yesterday. If you wanted to stay in, hoping that perhaps it would go higher, you could either set your stop at the bottom, but that's a pretty wide range to do that. Or you could set it in the middle and you would have been stopped out today. So it's a difficult call setting stops on a day like that. But because it went up so much, I probably would put something in the middle to at least capture some of those gains for the day. But that's the way things look. Notice on the squeeze chart up here on the histograms, the histogram is showing a bullish divergence potentially. It did come down again today, so we'll see what happens tomorrow. But even though the MACD is lower, that is not a bullish divergence. As the price went lower from this previous one, so you follow this bottom down here, this one right here down to this bottom, it's actually higher. So that potentially is a bullish divergence. Let's look at the NASDAQ 100, see what it's looking like. Very similar, same kind of candle. So pretty much the same thing, both of those. How about the Russell 2000, or the small and mid cap index? Everything looks exactly the same. By the way, this dotted line up here is the 1 week Bollinger Band. So we're sitting right down here, right on that extreme, and we're we're in the 2x right here. So the green is the 1x extreme, and inside the blue lines, it is the 2x. So it is really not at a significant extreme. When we get down here into the red, that's 3x, and we get over here into 4x. This was very extreme over here. So it was due for a bounce, obviously. And right now, usually what happens is it comes back to the mean. So it may come right back up here before it perhaps heads lower. We'll see. Doesn't mean it has to head lower. How about Bitcoin? Actually, I haven't looked at Bitcoin today, so kind of the same thing. It started off pretty much where it ended yesterday. It did come back to the mean, almost to the tick. Came right back to that 21-day moving average and then sold off from there. This one doesn't have as long as a tail on it as the other ones do. So it actually sold off more at the end of the day. And it too has a little bit of a bullish divergence, which might be positive. And MicroStrategy down here also came right back up to the 21 and is sitting right below it. So jury's still out on Bitcoin and pretty much the whole market as to what it's going to do next. The market bias matrix, not too much critical going on over here. We'll take a look at, let's see. There we go. So we got a couple of bullish ones, one bearish, not too many changes today, but we did get a couple more bullish ones. At one point, there were only 3 over here in the short term. So you'll notice over here, the short term is starting to pull back up a little bit. I need to extend this down a little lower because it actually went way down here to 4%. But the short term is starting to come back up, and that's usually what happens first. Also notice up here for the NASDAQ, it has a death cross going on. The other two aren't quite there yet. We'll actually look at these, and you'll see what these look like. So you can see if this crosses, the 50 crosses the 200, that would be a death cross. And when that happens, especially on the S&P and the Dow, then you'll start to see all kinds of articles about death cross just occurred, and that hasn't happened in years, and probably like 2008 again. That's not necessarily the case. This happened last year, almost a year, more than a year ago. And there were those articles started to come out. And somebody sent me one, say, hey, what's going on with this, the death cross? And then immediately, pretty much like the next day, it went back up. It continued to climb. This is just momentum carrying it down there. Went back above the 200. And I said, how come they didn't put an article that the death cross no longer exists? How come that article didn't come out? In fact, it then becomes a bullish golden cross, but no one wrote about that, but they love writing about the death cross. So stay tuned. We'll see what happens when those cross. I think, let's see, this is a daily chart. I would say this is probably sometime in the middle of next week when that's probably going to cross. So keep an eye out for those articles to start coming out when that happens. And well, we're not back up to the 21 yet, so we'll have to see what happens when we get there. All right, so let's take a look real quick at JP Morgan. So I mentioned at the open, they have the potential. They are reporting tomorrow. So on the web page, and this is open to anyone, you can go up here and click on this little button for looking at the current earnings calendar. And it brings you to this, and you can sort this in different ways. I want to sort it based on financials because those are the ones that are reporting. And you can see the ones coming up tomorrow. Bank of New York Mellon. These are all before the open. So before the market opens tomorrow, a lot of these are going to have reported. BlackRock, JP Morgan, there's the key one. Morgan Stanley, Wells Fargo tomorrow. And then next week, on Monday, Goldman Sachs, Bank of America on Tuesday, Citigroup on Tuesday, PNC on Tuesday. These all start coming in next week. So earnings season kicks off in earnest starting tomorrow. But let's take a look at JP Morgan and see what we can tell on this. Here's JP Morgan. You can see it's looks like the rest of the market. Lower low, lower high. We have not yet made a higher high, so it has to get back pretty much above the 50-day moving average right here in order to make a higher high. It's sitting right at the 200, so very, very critical area. One thing that I like to look at when we're going into earnings season is the relative strength chart. So this chart basically shows you the strength, the relative strength. There's the chart up above. You can see right at the 200 day, still below the 50 and the 21. Here's the accumulation distribution line, which is heading higher. So that's positive. However, it is not back above the previous highs. So it really needs to get back above those highs. And tomorrow will determine whether it does that or reverses and starts going the other way. But so far, that does have a higher high, or higher low rather. There's a higher low on the accumulation. You can use the same idea with the indicators as well. But I like to look at how they're doing it versus their peers. So this blue panel down here shows you how JP Morgan is doing versus its own industry group. And right now it is about 9% higher than its peer group. And it's above its 50-day moving average as well. So that's very positive. That shows that they have some strength versus their peer group. Also, JP Morgan is outperforming the S&P. So outperforming the S&P by a little more than 11%. This horizontal line here represents 7%. So right now they're outperforming both their peers and the S&P. That is very positive heading into earnings, as well as looking at the accumulation distribution line. Those are the things I like to look at. So this implies to me that I think earnings will be okay for JP Morgan, but the key to everything this earnings season is what's their forecast? What will they say about next year or next quarter as well? You can see the sector is outperforming the S&P, which is good. However, the industry group is underperforming the sector. So banks underperforming the sector, and they're actually outperforming the S&P, but it's heading lower. So it's trending lower right now. But the top two up here are the most important ones, these two. By the way, for those that are interested, on the website, on the chart lists and scans page, for those that have a subscription to Stock Charts, which is the platform that I use for charting, you can go right here, click on that button, and you can see all the different levels. I'm the extra level. That's where I am. So gives you lots of great tools. But I also put right here my favorite chart styles. So the one I just showed you is the relative strength. That's this one right here. I'm probably going to update because I've changed some of these. I change them as I go along. So I'm probably going to update these soon. Might just do that tomorrow even. But there's the relative strength chart right there. I also have some scans in here that you can just copy and paste into your Stock Charts platform. On the left side, I have the short squeeze candidates. These are the criteria for this. And these are the ACP, Stock Charts ACP format. So lots of good information here for those that are Stock Charts subscribers. Makes things very easy for you. So that's basically where you can get that. So again, as we go back to JP Morgan, let's do the same thing with BlackRock. See what BlackRock looks like. So we'll look over here at the relative strength, and it's not as strong versus its peers, but it is outperforming. So it's up 3% above its peer group, but it's actually outperforming the S&P, but it's trending lower versus the S&P. So here's the zero line. Here's this horizontal line is the 7%. It's just below 3% outperforming the S&P. This, by the way, that outperformance is over a 7-month period. So that time frame makes a difference in what it looks like. Let me go back to JP Morgan again and show you what I mean. If I change this to, let's change it to 1 year and 7 months. Now we'll see how they're doing. So if we look at that, now you can see that JP Morgan is outperforming by almost 19%, its peer group, for over a year and a half period. And it's outperforming the S&P by 40%. So over a year and a half, it's even stronger than just over the last 7 months. So that's kind of how that works. But we're looking at 7 months just to make a equal comparison to all of these. Let's see what else we have. Morgan Stanley. Let's look at Wells Fargo. Wells Fargo also reporting tomorrow before the open. All of the charts look similar. This is a little lower than its 200-day. And again, if I look over here at how it's doing versus its peer group, it's outperforming. This is over 7 months, by the way. So it is outperforming its peer group by quite a bit, 18%, outperforming the S&P by 21%. So Wells Fargo actually looks like the stronger of the ones that I've just looked at. And look at the accumulation distribution line. That looks very strong as well. So I suspect that Wells Fargo actually might beat earnings, but just like everything, I think a lot of these companies are going to take the opportunity to use tariffs and the weakness in the market and lots of other things to guide lower, pulling down their guidance, and then therefore giving them the opportunity to beat when it comes out next quarter or the quarter after. So that's what it looks like for tomorrow's earnings. Keep an eye on those tomorrow. One other thing that I want to discuss, because I had a question about this when I was talking about the market timing strategy, which I really appreciate everyone's questions. And please continue to ask questions. There are no dumb questions. I will try to answer everything. This is really just a learning experience. That's what all of this is about. But on the daily chart, I had a subscriber ask me, and you can see I actually circle this for my response. Now, in this particular case, we were short right here and got out of the short yesterday on that big, huge rally. Probably could have stayed in because it didn't get above the 21 right there. But because it was such a strong rally, I just took the opportunity to get out right there. We'll see what happens. Probably won't get back in on the short side at this point. We'll wait and see what happens. We might still get another rally. But the question was, look back here. I said I like to wait for it to get above the 21-day exponential moving average, and that's where I like to buy. So that would be right there. And there's another one right there. And this person said, well, if you had done that, you would have been whipsawed and probably would have ended up with a loss through this period. And that's true. So if you got in for this one above the 21, you would have been out on this one. If you got in on this one, you would have been out the very next day. However, and he gave me a screenshot of just this area right here. So I sent him a screenshot of the whole thing. And I want to reiterate, I have said this before a number of times. Number one, when you're using a daily chart, and that the whole strategy, the market timing strategy for a long term, especially with 401k, is based on the weekly, not the daily chart. So if you are using a daily chart, there is much higher opportunity to get whipsawed out of positions like this. Number one. Number two, as I have said many times, never, ever, ever use only one indicator. Always combine it with other things. So I would never just say, look, that's above the 21, so I'm getting in. No, I will take a look at everything else. The first thing I pointed out is the force indicator down here. And I covered the force indicator on a technical Tuesday a couple of months ago. It was one of the first ones that I did. So that might be back last December or November. But you can go into that playlist on the channel and go back and review the force indicator that we see down here. Notice it's below zero through this whole period. So that's the first caution sign. If this goes above the 21, I would look at this and say, well, that's really not much above zero right there. Might not be a good time to get in. And it came back down and this stayed below zero. So that's number one. Number two, the MACD histogram went went below zero way back here. So that was the first warning sign. You can see the lines actually cross. You can't see them on this chart, but they actually cross back here. So the first warning sign was in this area, even though it was still bullish, still with blue candles and still staying, above the 21. But when it came right down right here with a red candle, and this one actually started to get bigger, meaning the momentum was accelerating, then that was the warning sign, maybe even to get out on that one. The next one that went under the 21 was the next day. All right, so once that happened, not only that, the MACD line, the black line right here, went below zero. Whenever that happens, then it confirms that it is in a downtrend. And I did this on a technical Tuesday as well. So you can go back and review the previous ones on the MACD. Whenever the black line goes below zero, then it confirms a downtrend. So I do not want to jump in just because this goes above the 21. I want to look at these things as well. I can see that that's below zero, or at least right at zero, which is basically flat. So I probably don't want to get in on that one. So there's three things that are giving me warnings that maybe that's not a good one to get in on. The other one is the ADX line down here. And what you'll notice with the ADX, think of this as the red one is the strength of the bears. The green one is the strength of the bulls. And you can see the bears were overwhelming the bulls right here, right on this red candle that particular day. So with a preponderance of the evidence, with the MACD going below right there, it had already crossed back here. With the force indicator just crossing below zero, and with the ADX line, now the bears taking control, and this is above the 25 level as well, then that gave me one more reason not to get back in on that one. So then it came down. What about the next one? What about when it started coming up again? Maybe that was the time to get back in. Well, the first thing I would do is look at this, and now this is firmly below zero. The next thing I would look at too is not only is the force indicator below zero, but the 5 moving average is actually further away from the 21 than this one was. So it's even accelerating more to the downside. And the same thing down here, the bears are overwhelming the bulls. The red is above the green. So that's not a good one to get in. So the next one where it went above the 21, where I do have an indicator to go long right there, you can see that even though the histogram is not above zero, it's just about to move above zero. And it actually did the very next day. So you could have waited one more day, perhaps, but it's a green bar right there. Histogram went above zero right there. That didn't cross the zero line until over here. And look at what happened with the ADX line. So now the bulls are now overwhelming the bears down here. So now it has become much more bullish at this point. So that's the one where I would get in right there, not either of these. And that's the reason. And this is a great example of why you should never use just one indicator to get a signal, especially if you're using the daily chart. So then it went along, and right here it went below. You could say what happened here, it went below the 21 right there and closed just below it, which is true, but the other signals, the ADX is inconclusive down here, but the MACD is still pretty much flat. So this could have been an exit right there, but in this case, I gave it the benefit of the doubt. It went up and stayed above it until right over here. And then it went down decisively. And you can see the MACD crossed up there, and now the ADX line is already crossed. In fact, the ADX line crossed back here, probably on this green one. So that's the way I use this. I cannot stress enough that you can't just go by one indicator. You have to look at many things and really weigh the evidence of what's going on. All right, let me finish up with the dashboard. You can see right here for today, the Dow. So today is right here. So, oops, well, we can look at this. Here's the daily chart for the Dow. And you can see it gapped down at the open, sold off, and then started to come back again. So that's what created that tail at the end. So that means that the afternoon there was buying, and that's positive. That's usually where Wall Street is starting to get back in. The VIX is starting to move lower, try to come back up, but then went lower again. Still way in bearish territory, however. Down here, you can see on the daily view, there's the big green candle from yesterday, and today we started down here and didn't really do too much today. And on the weekly view, it's still a big red bar, and it's sitting right above the 200-week moving average. That is a critical area right there. We actually really would want to see this continue to move higher right here, even if it goes back up and makes it back up here to the 21. This is a weekly chart. And if this, of course, goes below here, which I think it probably will by next week, then we will have a bearish configuration. But this could bounce right back up here to this 50 and 21 and then move back lower again. But we don't want it to close. This is a weekly, so we don't want it to close below that 200-week moving average down there. That's what we're watching for. All right, let's go back to the dashboard. NASDAQ 100 looks similar. There's the VIX. VIX spiked, went way up, and then pulled back towards the end of the day. And you can see even right at the end, it pulled back even more, which implies we might get a bounce tomorrow, might go sideways. I think it's really going to depend on those bank earnings. That's really going to determine what happens tomorrow, I think. Look how different this looks. Remember yesterday? It was just solid green over here on the advancing side. Now it's solid red on the declining side. Now we have staples and utilities and real estate, the three most defensive sectors. So this whole thing is flipped around in one day. So all the three defensive sectors now are at the top of the list. We've got XLC, XLY, and XLK at the bottom, and energy all the way at the bottom. But now it is completely flipped into a much more bearish configuration. So the jury is still out, I would say. Let's see what we have for industry groups for today. Gold made a comeback. You can see over here we've got a bunch of gold. 1, 2, 3, 4 gold stocks over here. And that's the U.S. mining index and gold mining. Both of those are at the top of the industry groups. Water, apparel, those look like the more interesting ones. Soft drinks down here. So let's go take a look at those. Pull this back a little bit. I'm going to go take a look at those. The mining index and the gold mining index. Just see what stocks are in that. If you go to the charts page right here, and this has all the industry groups. Here are the materials, which is where those are. You can see last week, aluminum and non-ferrous were at the bottom 10 for last week. But let's take a look at mining. And this little box right here will show you the stocks. So here's the mining stocks. These are the ones that did well today. This is just for today, intraday. So you can see right there, up 14%, up 10%. These are mining stocks right here. Don't recognize too many names on that one, but let's look at over a 1 week period. And none of those jump out at me either. But those are the ones that performed well for the whole week. We go back and look at gold mining specifically. Now we can see just for today, there's Harmony. That was at the top of my list. Goldfields, GFI. There's Anglo Gold right there. IAG. So these are all gold mining stocks. We go back for 1 week and look at the percentages. This is just today. 16%, 13%. We look at the full week. And Harmony is up almost 11% for the week. A lot of these. Kinross Gold, up 8% for the week. So if we look at, just take a look at that one. There you go. There's the gold mining stocks just screaming higher. So we could have got in on this pullback back here. Gold has just been continuing to go up, but gold miners were lagging a little bit. So it looks like they might be trying to catch up. So that looks pretty interesting, but that's one way that you can check out which stocks look like the better ones. If we look at semiconductors, was in the bottom 10 last week. Just out of curiosity, we can see what happened today and for the full week. There's Broadcom, number 3, up almost 12% for the week. What else we got? NVIDIA, up nearly 6% for the week. ASML, Qualcomm is on there. Go all the way to the bottom. So those are the semiconductor stocks. That's a way you can just see which stocks are doing well, and you can go further back. Let's go back 1 month, and these are the ones that are outperforming. You see, NVIDIA for the month is basically flat for the month. Intel basically flat for the month. All right, so that's one way that you can check those. We can look real quick at the bottom finder chart. I don't think there's going to be anything earth-shattering here. So you can see it's trying to go back up. The number of stocks now, there's only 13 stocks above the 20. There's only 11 above the 50. That's interesting. And 31 above the 200 day. Just out of curiosity, I'm going to go back here. This is one way you can use stock charts. This guy here I follow, by the way, if anybody's interested. Tom Bowley. He does a lot of good technical analysis. But I have a bottom finder stocks that I can search for the stocks, NASDAQ 100, stocks above the 20. I'm going to actually do stocks above the 50. We'll look at all of them. So this is for the NASDAQ 100. So this is how you can create a scan, very simple, in stock charts. And I'll run that. And you can see there's 31 stocks above in the NASDAQ 100 above their 50-day moving average. Now, what I'm going to do is I'm going to move these over to another chart list so I can filter it. Just something, I just call this at the very top of my list. I'm put that one at the top of my list, so it's real easy to get to. Transfer all of this over there, and now I can add some columns to it. In this case, I'm going to add the 20, the 50, and the 200. And that way we can see which ones are outperforming. Bring this back a little bit. Okay, so now we can, let me get rid of the the dividends. Get rid of these dividend stocks. And now we can see what this looks like. So let's sort on stocks above the 50. So you can see 1, 2, 3, 4, 5, 6, 7, 8, 9 above the 50, and 1, 2, 3, 4, 5, 6, 7, 8 above the 20. The one that Coca-Cola Euro is the one that is below the 20 out of this group. So this is a way you can basically just sort these if you want to see just the ones above their 20. Those are these right here. So you can just sort them and see which stocks are doing the best. Palantir is number 2 above the 20. It gives you the distance above the 20. So the ones that are the furthest away from the 200, I just sorted in the 200. Palantir number 1 and Apple number 2. These two are the furthest away from their 200-day moving average. Let's see the furthest away from the 50-day. Now we've got Monster Beverage, Keurig, both soft drinks, Copart. So those are the ones the furthest from their 50-day, and the furthest away from the 20-day. Palantir is number 2. CrowdStrike is number 3 on this one, and Costco is on there, number 5. So if we take a look at CrowdStrike, you can see right there. There's the chart. And you can see there's the 20-day right there. It's below the 50. But this is one way that you can sort and find the stocks that are above their 50 or 200-day moving average. There's Palantir, the one that's the furthest away from the 200-day. So here's the 200 way down here. So out of all of the stocks in the NASDAQ 100, Palantir is the furthest above the 200-day moving average, which implies that it's the strongest of most of those stocks. So this one is one that might recover more quickly. You can notice also that it has a bullish divergence. So it had a low there and a lower low there, had a low here, but a higher low here. So this is a great example of a bullish divergence on a stock. So there's lots of things positive about Palantir as we look at it. We can also see what it looks like versus, let's see, is Keltner channel. So it's sitting right above the midpoint. So it went all the way down here to the 3X and then came all the way back, reversion to the mean. It's actually above it right now. It's in the 1X area. So all of these buttons over here are on the website I showed you before. All right. So that's the way to do it. That's it for today. Good luck for tomorrow. Tomorrow is Friday. Tomorrow begins earnings season. JP Morgan's going to kick it off. We'll see if they can either send the market higher or push it lower. We'll find out first thing in the morning and then watch the futures. Futures will tell you which way it's going to go. All right. Thanks for watching. Please like and subscribe. And if you want me to keep the channel going, I'd be happy to answer any questions that you might have. And please, I encourage you to ask questions. I try to answer as many as I can, and I'll put them into the video if it makes sense so that everybody can get benefit from that. All right. Thanks, everyone. Talk to you soon, and stay safe.